What is up, everybody? It is Tuesday, July 12th, around 8:45 p.m. Eastern time for the market analysis video. So today was an interesting day for the market. We gapped up higher, sold off a little bit, and then closed higher for the day. We've had an incredible 7 days of move, and we're starting actually to get pretty high, on the momentum indexes in the near term, as we've had one of the largest 7 day rips in years. So what I'm looking for in the SPY right now is a little bit of a relative top, whether that's a sharp pullback based maybe on some news or something like that, down to this. Originally I was thinking 205, but it may only make it to the 50-day moving average around 208. Or we could get some kind of rounding top here as momentum peters out and sellers come in. So the top half of this arc and then move down. But I am looking for a short-term sell-off after this rather large and strong move post-Brexit to get to all-time highs on the SPY. But what this tells me, the all-time highs in the SPY tells me that this is very much a risk-on environment right at the moment. So I think with the Brexit fears being realized and then seen as not that big of a mover in the long term, at least for the U.S. market, I think risk-on assets or riskier assets are getting bought versus safe havens at this point. Now, with currencies getting devalued, I think there are a lot of commodities and precious metals and so on will still have a lot of buying power. But right now, at this moment, I think riskier assets obviously are getting bought, and the risk-off positions that were immediately purchased upon Brexit or moved into are getting unwound a little bit. So if we look at that, gold took a precipitous tumble on higher volume here today, which tells me that it'll probably, whether it gets a bounce back or not, my guess is it will probably enter this range at some point before. Now, there is a support in this area, this 127 to 125 area. So I expect it to hold there, at least in the short term, and if it does hit there, at least to get some kind of bounce. Overall, I still think fundamentally the fundamental picture is very strong for gold, and it is mounting a bullish market after a long bearish decline. And I think in this negative interest rate environment, gold has a very strong fundamental case for going higher. That being said, it is also viewed as a risk-off asset, and so this short-term rally, I think we've seen it sell off after obviously quite a nice run up here. So selling off a little bit is to be expected along the way. What's interesting is that the U.S. dollar, and I think this speaks to my point, the U.S. dollar sold off initially, but then got bought back and barely declined at all. So what that's telling me, and I think it's still to be expected, is that a lot of currency stores are being converted from euros and the pound, unwound out of these foreign currencies into the U.S. dollar, which is seen as the safe haven. Right now, the U.S. dollar is really best in breed. It's one of the only major currencies that still has a positive rate. And so as other countries in the European countries move more and more towards negative interest rates, the U.S. dollar, even though it's looking like it's leaning more towards at least neutral, I wouldn't say we're leaning towards easing at this point. But if the economy were to take a downturn, I could definitely see that coming into the picture. But it's not there yet, whereas the other countries appear to be, that does appear to be the conversation, easing rate cuts and more of those. And so the U.S. dollar becomes the strongest because of that. And so I believe positions are going to continue to be built in the U.S. dollar over the next 6 months. These currency positions are very, very large, and it'll take some time before that post-Brexit and this new negative interest rate environment trade unwinds. And so I think the U.S. dollar, it'll be very hard to get any sell-off in the U.S. dollar, any meaningful sell-off in the U.S. dollar, in my opinion. That doesn't mean things can't happen in the case of a recession and so forth, and we move into quantitative easing, etc. But right now, the fundamental picture for the U.S. dollar is very, very strong. Looking at the financials, it was another big day for the financial sector, catching up to this pre-Brexit high here. So we surpassed that. While closed, looks like we closed right on it, but we did suppress it intraday. And it'll be interesting to see where the financials can go from now. Obviously, in a low yield environment, it's very hard for financials to make money, the big money lenders to make money with yields so low. However, again, the U.S. banks appear to be the best in breed. If we look at Deutsche Bank and Barclays, all of these other banks caught a large bid today, but they're nowhere close to their pre-Brexit levels. They've all taken a major hit, and I think it'll be very difficult for them to recover from the Brexit hit. It'll be interesting to see how it plays out. I'm not saying they won't recover ever, but it will take some real constructive fundamentals for them to come back after the Brexit in the near term. As the Brexit issues get resolved, and if and when they get resolved successfully, that will provide the opportunity for these banks to get bid up higher. They're in a very quote-unquote cheap state right now, where they look like they are a bargain from their fundamental perspectives, their cash levels, etc. And a lot of them are selling off the less profitable areas of their business because they're so below book value. So it'll be interesting to see where they go from here, especially where the Europe goes from here. I think the UK has a very high chance of recession at this point. We'll see how that picture unfolds. Looking at some of the transports, there we go. Delta obviously took a large swing up, so this had a large downswing, which obviously makes a bearish case. DAL theory suggests that transportation has to lead the market, and it has certainly led the market higher here in this rally. However, we're at the 50-day moving average now. Again, as I spoke in my previous video, I see a lot of resistance here at this level, so I don't really foresee a much larger rally coming without some sort of correction and some sort of selling pressure. So that's my next expectation. Judging by the economic news, etc., it could be a great buying opportunity if we go back down to this 208, 209 level or lower. I believe that would be the place, a possible entry spot to buy, and I'll be looking to do that possibly based on some of my strategies. A lot of my strategies are taking a break here in July. And in the wake of Brexit, I missed a lot of this move up. However, I caught a lot of the move in gold. I'm looking at oil right now. So I don't know if we spoke about oil, but oil went up much higher on the session, and I believed it would stop at $45 a barrel and rally. It went a little bit lower than that, which surprised me, but it rallied now. So I'm not sure if there was independent news that came out on oil, but it makes sense along with this risk-on appetite for the S&P 500 and the stock indexes, that we would see a bullish rise in oil. I still think over the long term, oil is in the very beginning of a constructive phase up. It's had a long way down, and so I think that it's going to return to quote-unquote normal prices, certainly above $50, $60, $70 a barrel, but it will could take some time to get there, and we see some growth. We're seeing some constructive bullishness as looks like it's being accumulated. It'll be interesting to see what the catalyst could be for it to shoot off into a more obvious bull market. So we'll have to keep an eye out on that. But for now, looking for a bit of a correction or a short-term sell-off in the SPY over the next few weeks. Maybe a rounded top here, and then a gentle sloping sell-off, or we could see a spike down into support areas. Either or, but I'm looking for a bit of a sell-off to possibly make an entry in several different assets. So with all that being said, I hope you all are enjoying your summer. Subscribe to my YouTube channel, Twitter and StockTwits at TradeKraken, TradeKraken, Trade Kraken. And God bless, good luck, great trading.